would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California. Member of the National Association of Realtors. But please, don't hold that against me. Happy Friday, everybody. I gotta tell you, it has been a crazy week. Very, very busy. I hope you guys have gotten a lot accomplished. I can't say I have. I've been super busy, and I've been out there swinging with some creative offers. Still have yet to hear back. Not optimistic, but hey, if you're not out there swinging, you're not getting things done anyway, right? So it's all about the effort, and eventually that kind of stuff pays off, but sometimes it can take a while. So we'll see how it all goes. I'm kind of trying to accelerate my timetable a little bit. We've talked about my plan for getting my property sold, using that cash to then purchase another property to live in, potentially then keeping some of that back, investing in a duplex or some other property up in Sacramento, or even I've been actually kind of pleasantly surprised by decent duplexes showing up in my area, or areas I'd be willing to do that are a little further north, and north is better. North is more rentable. So there's some options there, right? Just keeping my options open. But there have been properties that have popped up recently that are just amazing and fit the bill well for potential creative purchasing, particularly properties that are vacant, where I know that the owner is continuing to have to do the month-to-month maintenance of the property. So I was trying to do, I had one option that I thought a lease option would really work well. It would give me the opportunity to actually move out of my place, lease the new place, and be out of here while all the work is going on, and be able to show the place staged just with the stuff to make it look nice, and then get the rest of the furniture out into the new place. Would have been a nice blend. Would have added a great deal of cost, right? Because now I'm not only paying holding costs of this property, but then also rental of the other property. But of course, I would have negotiated a deal where part of my rent is now going towards the purchase price of the home, which I did. That's the way I wrote the offer. I gave them 2 days to respond. Haven't heard back yet, but it doesn't expire till, when did I do that? Yeah, so it expires today at 5 p.m. So we'll see. Anyway, we've got to, I'm trying to get all of the info here, right? I realize sometimes it seems like there's nothing but bad news. We did do a show with good news earlier this week, and we got another one. At least I think there is some good news to be had here. Now, this time around, the news is relating to construction. Now, what have we been talking about forever? That the solution to our problem is not the solutions that are being offered. All along, we've been discussing that by making it easier for buyers to buy, by reaching out more and more to subprime borrowers, you are not fixing the problem. You're making the problem worse. You're making the existing inventory cost more because there are more people demanding the same number of homes. The solution comes from the inventory side. So we've got some good news. It's up to you to decide if this news is based on solid data for the folks that are doing these things, but we can talk about that a little bit more. Let's just stick with the shiny, happy part first. Now, from Housing Wire, housing starts increase driven by single-family residential. A wonderful change from what we've seen. So no matter what we have to say about increased construction or reduced construction in certain areas, at least what we're seeing is single family residential. What we've been seeing up till now has been all apartments, all giant apartment complexes, right? That's what's been dominating in terms of construction. focusing more on density of housing units. And while that's all fine, and there are areas where that's absolutely necessary, I would argue that I wouldn't go for apartments in those scenarios. I would go for an attempt to at least give someone the kind of space they're hoping for in a single family home, but in a condo style or in a townhouse style. And if you have to go high rise, obviously, it has to be a condo. But to allow people to buy in if it makes sense in their marketplace. Creating more rental units is also an important part of it, but I'd prefer a balanced approach. We can argue around the margins about that one, but anything that moves that direction I think is good. All signs, according to this article, point to more residential construction in 2017. Now, remember, this is also a topic we've kind of theorized about. A lot of the pundits out there have been talking about how 2020 would be the year when we would start to see things really start to come out in terms of inventory that would start to take a big chunk out of this demand. So it could be we're seeing that wave coming in a little bit early. Now, before we jump too much further into this story, I want to remind everyone the best way to get in contact with me is to head on over to therebelbroker.com. Click on contact in the menu bar, and from there you can send along any ideas, suggestions, observations, or questions that you might have. And also, I wanted to let everyone know that the $50 Amazon gift card for March is in the hands of the winner. Congratulations to Stephanie. That went out yesterday, and she is all set and ready to go shopping on Amazon on me. Now, if you would like to be able to shop Amazon on me as well, all you got to do is, again, head over to therebelbroker.com, click the big red button at the top of the screen titled Take the Survey to support the show. You'll be asked your email address twice. Use the same email address both times. Answer a handful of demographic questions, and you will be automatically entered into a drawing for a $50 Amazon gift card in April. And of course, you'll also be helping the show. So it's a win-win. I win because you're helping the show grow. The purpose of this is to just get an understanding of the demographics of the folks who listen to the show. It's a way for me to grow the show, which was one of my primary goals at the beginning of this year, and also turn it into something that actually can be self-sustaining in terms of generating some cash flow. And in order for that to happen, in order for appropriate advertisers to jump in, demographic information is very useful. So that's what it's used for. I don't want there to be any sense of secrecy as to why I'm asking for this stuff. But anyway, thanks again for those who've jumped in and done that for me to support the show. And congratulations to all the folks who've won. I don't even know how many we've given out now. It's either 5 or 6 different $50 gift cards for Amazon. But congratulations to all the folks who've won. And good luck to all of you yet to win. All right, so jumping back in here relating to housing starts. The big news, I guess the headline, is the big shift has been towards single-family residentials. Privately owned housing starts increased in February 3% from January to 1.29 million. Again, this is data being shared by the folks over at HousingWire. And that's according to the latest report from the U.S. Census Bureau and the U.S. Department of Housing and Urban Development. This is an increase of 6.2% from last year. And this increase was driven by single-family housing starts, which increased 6.5% month over month. So that's a pretty dramatic increase. And I love that it starts, right? So they've actually begun construction on most of these. What's interesting, though, is that building permits saw a decline in February. Privately owned housing units authorized by building permits decreased 6.2% from January to 1.21 million, but remains 4.4% above February of 2016. Quote, and this is a quote from the folks over at Fannie Mae, the chief economist for Fannie Mae. Total housing starts for February rose by nearly 3%, driven by a 6.5% increase in single-family units. Or excuse me, that's not a quote from the Fannie Mae person. That's the chief economist at Nationwide, Dave Beerson. Goes on to say, quote, with home sales headed higher, builder confidence at the highest level since 2004 and relatively low levels of unsold homes, home builders should continue to increase the number of single-family starts over the course of the year. Building permits decreased overall. Single-family authorization increased in February by 3.1% monthly. So we can call that good news in terms of just the broader picture of feeding the demand. However, there is also something to be concerned about. And that is the correlation of what we see now compared to what we saw just before the downturn last time. Because the problem is, even with these numbers, even with what they're doing, in my particular area, and obviously these are national average numbers. I'd love to find out what the numbers are in my marketplace, because I see a few places where single family residential stuff is getting done. We talked about that the other day when I was going down the list of Morgan Hill construction, and how I'd seen a shift towards more reasonably priced properties that are brand spanking new. However, I don't think any of this is in a volume that's adequate to satisfy demand from the current roster of buyers. Particularly since over the next few months, and particularly once we hit July, remember, July 1st is the date that wiping out of all of that credit debt and all of that tax debt, and liens is just going to go away. Just going to go poof without any review to verify whether they're good or not, right? This is not an issue about incorrectly logged debt being put on someone's credit report. This is about simply assuming that all of those entries are incorrect if they don't have all of the three specific pieces of data they're looking for. And if you go and you talk to folks who research this stuff and are folks who are in the credit world, the vast majority of those end up actually being the debt of the person whose record it's on. And we're talking about 12 million people who are virtually by definition of what's going on with their credit at risk. And subprime borrowers. So I think that's something to be worried about. A very dramatic minority of those folks will actually be folks who are incorrectly being associated with a bad debt. So I think in July, we're likely to see a lot of folks suddenly qualifying who didn't qualify before. Will it come in a big wave? I have my doubts. I think that this... I don't think a lot of people are as plugged into their credit, so it may be something that has to phase in over a certain amount of time. But I think we'll absolutely see a blip. I think it wouldn't be a surprise if we saw some level of increase in that time frame. So what does that all equal? Well, it continues to equal a problem because, as I said, we're not seeing enough properties coming online or that seem to be in the works that will really satisfy demand. And in some markets, that may not be true. Remember, we're still continuing to see big drops in rental rates in New York. My argument there would be that would simply attract folks more to renting rather than buying in Manhattan, which could also affect the demand for single-family residential there. And I'm not even sure how much there is there. Single-family residential, as I know it, probably doesn't exist on Manhattan Island. It's probably more the condo/townhome brownstone type situation, which is a little different from my marketplace. But the thing that's interesting is, and this is for folks who've been listening to the show for a while and who have looked at my Pinterest and know the different graphs and stats that I've shared, we're seeing peaks coming that are absolutely the same as the peaks that preceded the last downturn. Lots of production of single-family residential homes, but still at a level that didn't reach the demand. We are still very low from that peak in terms of the amount of homes that were being built, but still very much also too low relating to demand. So it's not that we're hitting the exact same levels in terms of homes being made and that sort of thing, but the relationship of demand to the number of homes that are being put on the market is similar. So we're crazily driving up prices, which ended poorly last time. So we'll have to see where all that stuff goes. In addition, there's other data to think about. And again, remember what we've talked about before. Whenever you see a report that says feelings relating to something are here, whenever I hear that, I am going to look for things that show me actions that back that up. And we've talked about that a lot with home builder confidence before. Within the last 8 months, we have seen periods of time where home builder confidence was at record levels, but the number of architects working on projects was at record lows. The number of permits being applied for, record lows. The number of starts on construction was at record lows. So it's hard for me to buy that home builders are super confident when none of the things that happen when builders are actually confident enough to take action. None of those things are happening in the marketplace. We've already discussed that we have seen a peak in starts. The level of starts is good. And another piece of data to go with that is that home builder confidence is now at a 12-year high. Think about that for a minute. What happened 12 years ago? Well, 12 years ago, it was 2005. That's just before stuff went nuts. That is the period of time when we saw home builders doing this extreme ramp up. And for the next 2 years, the building of homes jumped. Now, have we seen that yet? No. But as soon as home builders see, I'm going to build some, right? They're not going crazy. The rate at which they're building single family residential is not this crazy, double digit increase and 10%, 15%. But they're doing it. They'll get to the season where it's time to sell them. And as I said, many of these aren't built yet, even in the Morgan Hill area. These are ones where the building is starting and they're putting together options to sell them now. They're going to see what happens. Remember, building tends to happen in phases, and it's very much a testing of the waters. I helped clients buy a brand new property about 1.5 years ago, 2 years ago in South San Jose. Lucky for them, man, that they have enjoyed a ridiculous amount of appreciation. But here's the point. They got in on phase 1 of the construction. For the exact same floor plan in phase 2, people were paying $80,000 more. That's how you can tell when things are going well for a builder. And when builders see those numbers, that's when confidence builds. And builders start to see that going around with their competitors and think, okay, well, we obviously need to jump in on this. There is a demand and we need to jump in. So these are the kinds of things that can feed into that frenzy we saw last time to jump in there and make sure to take advantage of this boost in the ability to get some profits to the point where they build, and potentially end up presenting us with the same circumstances that we bumped into last time that caused so much heartache. All right, folks, we're going to continue to talk about this after the break, so don't go away. We'll be right back after this.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner-broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
Hello, everyone. Welcome back. I'm going to go ahead and put to my Pinterest page an interesting chart showing monthly permits, starts, and completions per 1,000 U.S. households. And it goes all the way back to 1968. Makes the peaks really easy to see, and makes you realize that even that big peak that we saw back in 2007, 2006 wasn't the peak of the years since 1968. But go ahead and check that out if you would like to. It'll be in the Real Estate Realities page where I put all the stuff that I've talked about in the show. Let's see here. Quote, there's a long way to go before starts and completions are back to normal. Remember, when we are talking about real estate, you should be very cautious of when people use the word normal. If people are using the data that is the 10 years prior to 2007, that is not normal. I get that some of you have probably heard this a dozen times by now, but it's absolutely true. That is not normal. That whole period of time is 10 years prior to the 2007 downturn is really right near the birth date of what caused this problem. And it was something that ramped up over time. And we should all be afraid of that. We shouldn't call that normal. We should call that the stupid time. When a lot of very stupid financial things were done, a lot of subprime idiocy went on that resulted in 110% loans, stated income loans, all kinds of crazy crap. We talked about it the other day. But the quote that we're getting here from truly a chief economist, Ralph McLaughlin, is there's a long way to go before starts and completions are back to normal, with starts 66% and completions 60% of the 50-year average. So at least he's going with a 50-year average here. I would suggest, and what's interesting is, and again, I'm sharing that truly a thing that goes back 50 years. The peak that we reached in 2006, 2007 isn't even the highest point that we've seen over that last 50 years. It's actually relatively low. In fact, if we did an average of this entire graph, it would probably be far closer to what the average is overall for the last 50 years. But that's not what I care about primarily. It's interesting, don't get me wrong, because it's a graph that talks to you, that speaks to what's happening with supply, right? But there's only half the equation. It doesn't give you the whole picture. You need to know what was the demand during those times. How many buyers per home were there out in the marketplace? Now, and I used to run numbers so that I could try to get a good idea of how many buyers were there per property. So running that ratio between number of homes listed versus number of homes sold was giving me a pretty good insight into that, and was a really good indicator of just how hard it was for folks to get their hands on properties. Privately owned housing completion increased 5.4% monthly to a seasonally adjusted rate of 1.11 million. This is 8.7% above last year's rate. Single family housing completion sank 6.5% from January, but still up year over year. What else? Here's the corollary, and this another reason why I think this is interesting data to look at is we're not just seeing an increase in single family residential, we're seeing a shift in emphasis. I think it's kind of a healthy shift in emphasis. At least it is in my local market. And I know I hate having to keep going back to that and pointing that out, because in my area, we have built and are building tons of apartments, lots and lots and lots. And I kept wondering, when is this trend going to stop? Well, and again, I want to find out if this is a trend here. I haven't seen any new looking like construction for apartments in a while. All the stuff, there's a new one that's going up, for instance, on the 101 just south of Sunnyvale that looks pretty big, but they've been working on that one for a few months. I haven't seen any groundbreaking on new ones since then, but time will tell on that. But in the national average, the next story I want to share with you is building permits plunge most in 11 months amid multifamily slump. So that definitely falls under the category of apartments, right? Building permits in February plunged 6.2% month over month, the biggest drop since March 2016, driven by a tumble in multifamily units. So the big drop, we saw an increase in single family residentials in terms of yearly, and we saw a drop both month to month and over the year for multifamily. At least I believe that's what that data shows. Housing starts rose 3.3% month over month. The annual growth slipped back to 6.2%, again fading, despite a 12-year high in builder confidence. So I don't, and they're trying to reflect that this shows a lack of confidence. I think it may indicate that builders are realizing there's been a bit of an overbuild in some markets. I would say that's true in my area in terms of apartments, and have shifted their emphasis back over to single family. There's a great chart here. Again, I'll share this. This is housing permits, single and multifamily rental units, with a interesting dip in multis and an interesting increase in single family that looks like it could be in a position to change the landscape of what we're seeing out there. This could be the beginning of what folks were expecting to see happen in, say, 2020. And it depends if this continues. And as I said before, the payoff will be the thing. As builders see other builders making money doing this, there'll be several different stages to it, right? And as I mentioned before, when you're doing the phase 1 of construction, if you then find you're able to get more for that phase 2 and then more for phase 3, that all works great for the builder, and that builder gains confidence. Builders that are watching that builder gain confidence because they see the success of the project, and then they jump in and start doing the same thing. Everyone follows the money, so I don't think that's a huge secret. I think I'm not letting a big cat out of the bag on that. But home builder optimism, ridiculously high. Housing starts year over year. I'm going to go ahead and post this graph too, because it's kind of interesting. Because what's interesting is, as an average, they're both kind of going different directions. So that sort of illustrates that contradiction that we've talked about before, where homebuilder optimism goes through the roof, but the actual housing starts don't follow at a rate that would make sense, given how optimistic everyone is supposed to be. But again, I think that it takes that first chunk of builders to jump in and start building and prove to the rest of them that, yeah, you know what, we're making money on this. This is working. This is going. And then others will sort of jump on board. It'll be interesting to see how this plays out. If that's what we see, if we see buyers sort of gaining in paper confidence in terms of if when someone asks, yeah, I'm confident, but they aren't doing the actions we would expect of a confident home builder, as we see over time over this year, as they observe other builders reaping the rewards of their confidence that they're taking action on, well, maybe that just feeds that 2020 number. You see one builder gets confident and then another one sees it happening and then they start moving forward, and maybe it takes them 6 months to 8 months to get the project started. So maybe that 2020 isn't such a bad estimation. 2017 may be the beginning of what we might come to know as a resurgence in single family home construction. So then maybe 2018 is when things start to heat up a little bit more. 2019, we start to see a bump, and maybe 2020 is when we actually see supply start to meet demand. It'd be interesting to watch that happen, and the trends that we'll watch come by over that time frame will be very interesting. Okay, U.S. housing starts total 1.29 million in February versus 1.26 million starts expected. So this is an article from CNBC. I'm not going to get into the details, but what's interesting about this one is it points out how we exceeded expectations. And that has not been a great thing in the past. In the past, what we've seen is expectations not being met in a lot of ways. So that's another indicator that we're actually seeing actions that tend to fall in line with what builders are communicating. Let's see, what makes more sense? This is the one that makes more sense to talk about now. Home builders have not been this confident since the peak of the last housing bubble. They are literally at about the same spot. And we'll just have to see where it goes from here. Again, this is a chart that I'll share to Pinterest if you're interested in seeing it. If you'd like to get the link to my Pinterest page, head on over to therebelbroker.com and click the little Pinterest icon over on the little palette to the right, or just go to Pinterest, search on Rebel Broker. You should be able to find me. Quote, builders are buoyed by President Trump's actions on regulatory reform, particularly his recent executive order to rescind or revise the waters of the U.S. rule that impacts permitting. Builders continue to face a number of challenges, including rising material prices, higher mortgage rates, and shortages of lots and labor. As far as the material stuff goes, that's also a number we can point to because lumber prices have gone up, which indicates increased demand. Higher mortgage rates, I don't think are going to play into it. We're still seeing mortgage rates that are not even completely at the peak that they've been over the last 52 weeks. So I honestly think that that's not really going to play so much of a part. In other news that may relate to that, the Fed did raise the rate for the second time in 3 months. They only did 25 basis points. 25 basis points is a quarter of a point. What's interesting about that is when we talked about this the last time they raised it, we theorized that, yeah, they'll do it. They're going to have to do it because of just what they're saying about the economy and what they're trying to prove through their actions they believe about the economy. But it's the absolute weakest move they could make as an increase. 25 basis points is really the lowest they do. So that doesn't indicate any huge level of confidence. But it could just represent an interest in caution and moving slowly. So maybe you don't want to read too much into that. I personally see it as an indication that they secretly have this idea that things may not be as robust as they sell in the headlines, because if it was more robust, I think we would have seen a 50 basis point increase. And we talked about that in a show a few weeks back about first that we were betting on the increase was going to happen. It was just a question of how much, and gauge that a 0.5 increase would demonstrate a much higher level of confidence, and a 0.25 being the lowest they would do, representing the least level of confidence. So we'll see how that goes. In terms of what interest rates are actually doing, I went and looked at the mortgage rates and market data from Mortgage News Daily today. Everything is relatively mellow. There was no change from yesterday. It's still at 4.27%, which is a little up. We're still hovering closer to the 52-week high, but we're not at it. The 52-week high is 4.39%. For the 30-year fixed rate mortgage. The 15-year fixed rate mortgage is at 3.47, and that's flat from yesterday. The 52-week high for that one is 3.61. FHA 30-year fixed currently has actually gone down. It was 3.88. It was 3.9 yesterday. It's 3.88 today, so it's down 0.02. The jumbo 30-year fixed is at 4.5, and that's unchanged. And the 5/1 adjustable rate mortgage is at 3.08, which is down 0.02% from 3.1% the other day. So the only movement has been down in interest rates. That actually surprises me a little bit. We've talked about the psychology of interest rates before, where normally what you'll see is the uncertainty reaction, where folks are uncertain about what's going to happen because of the Fed changing rates. So artificially, the mortgage rate tends to go up for a couple of weeks and then drops back down. In many cases, dropping down below where it was prior to the Fed raising rates. Again, let the 10-year Treasury note be more of a guide to you on what you think of estimating what the mortgage rate is actually going to be versus what the Fed does. Okay, so we hit that. And the final thing I wanted to hit for today was the Trump regulatory reform sends builder confidence soaring to a 12-year high. But the experts are saying that they expect confidence to moderate. I'm not so sure I buy that. The only reason confidence would moderate would be if builders take action to build homes and that does not result in the profits that the market wants to see. According to the National Association of Home Builders and Wells Fargo housing market, it hit a 12-year high. This is all data we already talked about. They kind of get into a little bit of theorizing that it may not last. Again, I don't think any speculation on that is what is valid. I don't think talking about interest rates is valid. I don't think talking about any of these other items that they seem to want to focus on. It's strictly going to be, if they build it, do people buy it, and do they see a situation where there's escalation in the price? If they do the first phase of construction, do they get it all sold out and then they're able to move forward with phase 2? And are they able to charge a little bit more for the homes in phase 2? That happens, and that's kind of a snowball thing that really pushes, I think, the confidence levels up. And again, I worry less about confidence levels and more about action levels, and I think that's where we need to be. I still don't see action levels that fully correlate with the confidence levels, but we've got to start. So let's see where that goes, see where it takes us, and it could really change the makeup of a lot of different marketplaces. So keep an eye on what's going on in your area. Are you seeing construction going on that's clearly apartments? Are you seeing more single-family residential properties being developed? A lot of this is going to depend on your local area. I obviously share what I see here locally. You should use that same data yourself to try to estimate where markets are going to go, because a lot of this could shift the focus of what consumers are going for, from renting single-family residentials to going with apartments, depending on cost comparisons. I had a very interesting comment from a listener who's been enjoying the show through YouTube, where he fell right into the category of what we talked about on the show last week, where for him it was strictly a financial decision. He is able to pocket $500 a month because he's not renting a single-family residential. He's renting an apartment. And that's why he does it. So I'm already getting feedback from folks that the theory holds. Where we are now is a place where folks are simply making a decision to save more money than spend that extra set of dollars to get out of an apartment and into a single-family residential, because there's been so many apartments built that now you were starting to see more disparity. There was a period of time there where locally, the amount you would pay for a 2 or 3 bedroom apartment was on par with what you would pay for a single family residential home offering the same number of bedrooms. And that's nuts. But it was happening. In some areas, it still happens. So, all right. As always, hopefully I've given you a lot to think about today, and that you have spent your time profitably and are walking away with way more value in terms of stuff to think about than the time you spent listening to this show. At least that's the goal I go for each and every time. Thanks again for listening, everybody. I'll talk to y'all next time.